Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we're going to dive into a little bit of unusual whales options data on SoundHound AI, which is ticker symbol SOUN. You can see the chart behind me. So I'll first start with a little bit of technical analysis, but I did want to get into the data because I think it's a really nice example of the utility that there is with unusual whales in identifying trades, because this is one that was a multi-million-dollar trade. And so I just wanted to dive into the rabbit hole with you guys, go over that. I think it's a really great example of basically how I intend to use unusual whales to inform on stocks, whether that's trading options or shares. I think it's just a really nice tool, so wanted to get into that. But I should note that I am recording this on Wednesday, February 26th during market hours. As you can see, the price is changing up here, currently around $9.50, being up about 7% on the day. But I should caution that earnings are coming up tomorrow, February 27th, after hours. And this options data that I will be going over, it doesn't necessarily suggest that it will be bullish, but it's taken risk off the table on a large put position. So, that suggests that a bottom could be in, but that doesn't mean it's not going to go lower. And what I see in the chart here, I had put out a video going over how following this gap down, we saw a lot of volume here, which I thought we could be seeing a dead cat bounce up here before ultimately breaking lower. We did not see such an aggressive dead cat bounce. We saw a little one over here before breaking below this downtrend. Which, I also thought this would be acting as support because of this, I believe it was a prior high, that purple line there, from over here. That was at 1025, I believe. So, a lot of levels here that I thought might be acting as support, but it does look like we got a fade lower, followed by a breakdown, maybe got rescued by this 200-day moving average right around $8 a share, where I have this alert here. That alert has not yet gone off, but in all honesty, I suspect it will be going off. So I am, pumping the brakes, with SoundHound right now, until we see what happens after earnings. And I should note, before I get into this, I do have a very, very small position in SoundHound. Following this gap down, I just got 2 shares just because I wanted to be engaged in the stock to see if it did bounce like this. But it's only 2 shares, so no big deal. I'm just going to hold those and see where this takes us. And when the data from unusual whales starts to really suggest that this is going bearish or bullish, I might get a bigger position or maybe cut my loss if it is going to go a lot more bearish. But what I see is that we've got a bounce effectively from just above this 200-day moving average. The low yesterday on the 25th was, let's see what that low was, $8.49. You can see it marked right there just above the cursor. Did get a little bounce, but this downtrend that I have marked there along with 1025, that purple line there, lots of levels of resistance above us, also with the low from February 14th when we got this Valentine's Day gap down, hitting a low of $10.40. A lot of levels above us. And so if we are still trading, below 1050 or so prior to earnings, I suspect that we will get rejected from these levels and actually head lower, potentially to this 100% Fibonacci extension from this move here. So basically that gap down followed by the move to here, a 100% extension from that would be coming down to around $7 a share. So I think it is good to be cautious with SoundHound, especially with earnings and with these levels to the upside. I think it's likely going lower, but really not having anything to do with that, not having anything to do with earnings coming up, because I think it's really risky trading them, especially trading options. I wanted to get into some unusual whales options activity that I saw on unusual whales, and just kind of wanted to dive into the rabbit hole, because I think this is a great example of the utility of unusual whales. And so over here, I have just a list of stocks contracts that I track. Some of them I hold, some of them I don't. But really what I like to do with this list is just look at the premium data over here just behind me, because I think that that does have a lot of good insight into what's going on with bearish or bullish moves. And so the contract that I have been looking at, I do not hold a position in, is the $25 strike call that expires in January of next year, so about 324 days between now and expiration. So plenty of time there. And the reason why I like to have long-dated options contracts is because I am still very new to trading options and using them to inform on trading stocks. So I just like to have a big window between now and expiration. I like to keep that risk to a minimum. But anyways, yeah, that's one I do not hold. I'm just keeping an eye on it. But the data over here, I'm just going to expand this window, is the net call input premium. I do like to look at this on a daily basis, but the signal that I saw was actually from a few days ago. So I wanted to, expand this to be over the past 3 days. And so you might be able to see what I saw that stood out as being unusual. That's this pretty big move. Just getting that cursor over there. It looks like the net premium for puts here was around $1 million. But then we saw this basically gap up, this big move to around $7 million, almost $8 million. So I wanted to dive into that to try and understand where this signal was. It does look like since net put premium spiked up, it does seem to me like this was buying of puts. So this is a bearish signal. But if we do notice down here, the volume is red. And, so this was actually a really good lesson for me in seeing, okay, we see a spike in the net put premium. That makes me think that somebody's going short, that this is a bearish signal, but we have to consider the volume over here. And since that is negative, we will find out that this was actually the selling of puts and closing the majority of a position. And so that would not necessarily suggest that this is a bullish signal, but that it's a risk-off signal before earnings, which will be reported tomorrow, the 27th, after hours. And based on the options data, the expected move is around 15%, whether to the upside or downside, and that would represent a move of about $1.50. And from current price, around $9.60, $1.50 could bring that down to around $8, setting that alert off that I have. So do consider that stock price could be coming down, even though there is this put information here. And so the way that I wanted to dive into this to get more information on whether this is buying puts or selling puts, I am going to open up another tab, go over to unusual whales here, and I'm just going to look at the flow data, go to the flow feed, and let's see, I'm just going to clear this so I start anew, and I'm just going to go to the time range here, and I am going to adjust that to the 24th, and I saw that spike actually before I get into that. We saw the spike over here. It looks like right around just before 1 p.m. and just after 1 p.m. So I can make this window be pretty narrow. So let's see, I'm going to go to 12 and then adjust this to 50. And then I will make the ending date for that also on the 24th. And we can see I'm going to make this be at 1 p.m. there and adjust this to 5 minutes. So we've got a 15-minute window there. I am just going to apply that. This will stop moving because it is for that specific date and time, not live. And then I'll type in sound up here for SoundHound's so we get that information. And then I'm just going to scroll down to set the minimum premium to $100,000. We did see a spike up in $1 million, but actually, or by millions of dollars in that put premium. But if I type in $1 million here, we actually don't get any data. And that's because it wasn't one specific order. It was a series of orders. So I'm just going to delete one of those zeros. So we have, let's see. So we have some information here. And actually what I might want to do is adjust this window. I had just done this before the video. And let's see, so that's 100. Sorry, let's see. That's 100,000. If I have it at 1 million, there's nothing there. 100,000, nothing there. So I'm just going to adjust the time frame here. Maybe set this to 45 and set this to 15. So we have a 30-minute window there and apply that. And dang it, it looks like, okay, so we've got some more. Screwing this up while recording this. But yeah, we see the 24th. And let's see. Why is this? I'm not sure. See, I'm learning this, so hopefully this is helpful for you guys in seeing me fumble with this. But maybe I will just set this to noon. And then so we should get some more data there. Okay, yeah, I got that screwed up a little bit. And then I will adjust the results over here to have 250. And then we can see, let's see. Okay, so we've got a lot of information here. This is at around, let's see, 1 minute. And so this is 10,000, but let's make this, okay, so yeah, I've got 100,000 there. And it looks like, I don't know why I screwed it up there, I guess with the time. It might be because I personally am in the Midwest. And so the data here might be reflecting that, whereas over here, this is reflecting East Coast time. So that's probably where that mistake came about. But what we can see, with this time frame, with $100,000 being the, actually that's behind Ed, sorry about that. So I just typed in the premium there to 100,000. You can see the cursor is, basically the comma there. So that's 100,000. And so we can see in the data over here that we have a lot of stuff going on with this April 17th expiration contract, $20 strike put. And we can see that premium is hundreds of thousands of dollars there. So there was not $1 million order. So that's why, if I were to type another zero here, we'd have no data. But if I delete that, then we get these series of either buys or sells of this contract. And so if I click on that contract, I can get the information over here, and then we can adjust the date to see what was going on there. And actually, if I just look at 1 day here, I kind of had a spoiler there with it having the past 45 days, but 1 day so far today on the 26th, this contract, the $20 put that expires in April, has not yet been bought or sold. But if I go back 3 days, we can see this massive spike. And if we look at that pop-up, we can see the daily premium was $8,660,708. So almost $9 million, over $8 million traded in premium on this contract. In this candle premium, which is a 10-minute candle, but let's actually switch that over to 5 minutes. We can see that here. And we can see that the candle premium is $8.6 million, effectively all of the trading for that day. And we can see that the candle is green. Maybe if I switch this back over to 10-minute, we can just see a little bit thicker of a candle, maybe 30 minutes. Yeah, we just see a nice thick green candle there. And so that is telling us that this was made on the ask side, with some of it being on the mid side and a very small amount on the bid side, which would make me think that this is a buy because it's filled on the ask side. But if we look at the data down below, for the 24th, I'm going to get Ed out of the way. He's being a distraction there, hiding this important data. For the 24th, we can see that there was a volume of 8,000 contracts, and the open interest on the 24th was over 9,000. And so that tells me that it's quite possible that the majority of the open interest was being sold on the 24th. And then if we look at the data from the 25th, we see a decrease in that open interest of 7,000, over 7,000 contracts being sold. And then that open interest went from over 9,000 to just over 2,000. And so that tells me, while this is green and it does seem like it is a buy of this contract, based on the data from the past few days, we see this spike in net put premium. So that makes me think it's a buy. But because of this volume down here, it's suggesting selling because it's red. This, even though it's a green candle, the data down here tells us that it's selling. So that is not necessarily bearish, but it's also not necessarily bullish. It's somebody taking risk off the table before earnings. And that's not too surprising. That seems like a responsible trade. So it does make a lot of sense. And then so now what I can do, and actually what I can do is I can adjust the date over here to be the 24th. So we can look at the high resolution trading for that day. And it was actually, just consolidated, like what we saw by looking at the flow feed is that, it was just kind of this series of buys that added up to around $8 million. Okay, so that's, some nice information there. And then with this data over here, I do like to expand these to get, the bigger picture. And I think I actually had this over here. But anyways, looking at it, from over here, I could expand this going back to 30 days. And so what I like to do, we see this big spike in net put premium over the past 30 days. Was there anything that stood out that makes this seem not so unusual? And no, actually, there's nothing back here. So this tells me, especially with this being a spike in net put premium, that, hey, maybe this is a bearish signal because of this spike. But I need to see maybe there was a position further back prior to 30 trading days ago. That would be maybe the entry, and maybe this is the exit, because while this is a spike in net put premium, the data over here tells us that was a sell. And so what we can do, this chart, this data only goes back 30 days, just like, and I'll just have this over the 1 day, because it's on the 24th, that's what we're looking at over here. Looking at the data over here, because this can only go to a maximum of 30 days in the past, what I can do looking at this specific contract, the $20 put that expires in April, I can go back more than 30 days. I could go back 90 days if I wanted to, but because I've already looked at this, I can just go back 45 days. And what we see here is, very interestingly, we see another candle that is a similar height as the one over here. So the candle volume from just a few days ago was, let's see, from that pop-up, we can see that the candle volume was 8,000, over 8,000, 8,107 contracts. And then if we look at the candle over here from the, let's see, December 26th, we see that the candle volume is also over 8,000, 8,121 contracts. And so that is pretty interesting. That is pretty unusual. And so that makes me think that this was possibly a buy, and that this is maybe that person exiting after the premium in yellow has gone up. So they took some profits. And so let's see, how do we want to do this? There are a couple things that I can do. We can adjust the date over here. So now that we've isolated it to December 26th, I can adjust this over here, going back in time to, let's see, December 26th. So we can look at the high resolution trading of that day. But this, of course, is going to be showing 45 days worth of data. So I'm just going to switch that back to 1 day. And so we can see here, there was even an alert. Volume has exceeded open interest on this day, December 26th. And so let's look back in time. Actually, it was December 26th. Let's look back in time with Ed not in the way. We can see December 26th, there was a volume of over 8,000 contracts traded, as I had mentioned. And previously, the day before, there were only 18 contracts open on the 24th. And so we see this volume over 8,000. We get this alert, volume has exceeded open interest. That means that a large position is likely being established. And then so the following day on the 27th, looking at the data there, we see that the open interest went from 200, basically 299 on the 26th to over 8,000 on the 27th, an increase in open interest of over 8,000 contracts. So this volume was net buying, and we see this very large spike in that open interest. And we scroll into the future, let's just keep an eye on that open interest. It's still, 8,000, and then it's actually getting up to, over 10,000. And then let's keep on scrolling. It actually dips down a little bit below 10,000. So taking some risk off the table, it looks like. And then on the 24th, just a few days ago, we see that volume increase and those positions being sold. And so what I want to do, I am just going to adjust this back to, the more recent, so that when we saw that one spike just recently, and then I'm going to adjust this back to 45 days so we can see this full trade. And so I'm just going to do a little bit of math, bring up the calculator app and pull that over here so we can do some math on this. And so let's see, candle volume was 8,121. So 8121. All right, got that number there. That's the number of contracts, with the average fill being $4.77. So I'm going to multiply $4.77. That equals, because each options contract represents 100 shares, so that is 38,737 times 100. And so that represents $38,737,000. There are no commas there, so it makes it a little confusing for me. But we can actually see the number here in that candle premium. Dang it. Let's see. So 3,872 is what we have from Unusual Whales. So the number that I have is a little bit different, but yeah, let's see. And I'm actually just gonna, because there are no commas in that, I'm actually just gonna bring up a notepad so we can just note this, that it looks like a position was established for, $3,873,717 approximately. And so let's just say that the approximate number is 3.8, let's just round it down, $1 million. Okay? And so that's when the position was established. But now let's look over here where we have, bring back that calculator. So I'm just going to clear it. So we're starting anew. And we have the candle volume being 8,107, with that average fill being $10.72. So $10.72, that then being multiplied by 100 shares per contract, that equals over $8 million. So let's bring back the notepad to just add this data in here. And so we have $8,690,704, or, let's just round this. That is right around, being conservative, $8,600,000. Okay, so just being approximate there. And so let's take the difference. So $8,600,000 minus $3,800,000. That looks good. So that represents a profit of well over $4 million. So almost $5 million. So that's an excellent trade. That's a more than 100% swing. But I should note that the volume of this candle here was 8,107. However, we only saw a decrease in open interest of 7,000. So it's quite possible that this person, assuming it's one person, they still left some on the table. It's kind of a little bit of a gamble in case the stock does tank further following earnings. But either way, let's see this average fill here. Let's bring back the calculator app. I'm going to do a little bit of math on that. And so let's see. So the change change in open interest was 7,107. So let's say that's all they took off the table. So they left about 1,000 still on the table. So let's do the math of 7,107 contracts, multiply that by the average fill, which was $10.72, and then multiply that by 100 shares per contract. That represents maybe what they took off the table. And so if I pull up the notepad again and that calculator, so another pathway that they might have had, another option, would have been for if they took $7,618,704 profit, or approximately $7.6 million. And so just taking that number from over here, let's just see. So 7.6 million minus 3.8 million is, and that actually makes a lot of sense too. I have not done this before, but so basically, what it looks like is they took 100% profit. This was a 2x swing. So they put in $3.8 million, waited for that to double, took out $7.6 million, and left the rest in to see, what happens around earnings, because maybe they could make more. And so effectively, this trader, if this is one trader, they took $3.8 million and doubled it, with the possibility of making even more. So I think that's super cool. This is what I want to be looking for with unusual whales. Not necessarily looking for a trade that's been completed that made multi-million-dollar trade that was completed. What I want to look for is spikes like this that stand out as unusual, and then maybe tag along on the trade. I'm not going to make multi-million dollars on it. Maybe I'll make a couple hundred or a couple thousand. But yeah, I just think that this is a beautiful, beautiful example of how to utilize unusual whales, and also to demonstrate, basically my progress in learning how to utilize unusual whales. And I hope to utilize that in future videos. And so if I do talk about unusual whales, that's not to say I think that a call or a put is a good decision to buy or sell, but I think that this can be used to inform on the chart. And what I think is going on, like I had mentioned at the beginning of this video, is that this is likely to break down a little bit further before it starts to go higher. And when I see maybe some more unusual whales options activity, I'll make a video on it. So, with that being said, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and good luck around earnings. Hopefully it goes well for you guys. Take care.